What is up YouTube? This is your host Yasin Nizami, and today I'm going to talk about a little bit different subject. It's a bit complex, but I'll try to make it simple for you guys to understand. And it's very important because it's about monetary policy and how a central bank of any country, one of the main responsibility for a central bank is to control or create the monetary policy that actually controls the inflation in that country, and that has a direct impact on our lives, your lives, my life, our financial ability, our financial health. How do we make money, how do we save, and how we spend? It has a direct impact on that. So it's very important for all of us to understand, at least at a high level, how this monetary policy that is created by Bank of Canada is going to impact our financial ability, not only today but going forward. So let's dive in. Now, before we get into it, if you're new to my channel, I personally welcome you. Thanks for tuning in. And if you did not hit the subscribe button yet, please do it now, because if you don't, you'll be missing a lot of content like this one that I will be publishing on a regular basis. As I said, one of the main responsibilities of Bank of Canada is to create monetary policy that controls the inflation in the country. Now, inflation has different levels. The optimal target for inflation is 2%, right? If the inflation levels are below 2%, that's also bad. If it is above 2%, that's also bad. So below means the country is struggling economically, so the Bank of Canada needs to take some actions to kind of increase the inflation a little bit to achieve the target of 2%. If it is above 2%, that means it's high inflation. That means the price of goods and services have gone up, and you have to spend more money in order to buy the same amount of goods and services that you used to buy with the given currency. The Bank of Canada or any central bank in any country, the way they create monetary policy is by utilizing some tools, financial tools they call it. The two of the most common tools are varying the interest rate, and number two is quantitative easing. I will come to quantitative easing later on. So by varying the interest rate, they can control the economy and inflation in a way. So when the economy is struggling, right? For example, in our today's world, when we have pandemic everywhere, almost every country is struggling economically and financially. So the Bank of Canada, just like any other central bank of any country, they reduce the interest rate. When they reduce the interest rate, what happens? The borrowing becomes cheaper. Okay, not only in one financial market, but almost other financial markets in the country. And this basically stimulate the spending power in consumers, right? When people think, oh, the borrowing is so cheap, now I can afford more loan to buy something else, real estate, cars, whatever, right? And it's a dilemma of our financial system where everything is driven by debt. They encourage people to take more debt to spend more money, and this is where they expect that this will stimulate the economy going forward. Now, given the interest rate in Canada is already almost 0.25, they cannot go negative, right? Although Bank of Canada has already said they can consider to go negative as well, but that will be the extreme measures. But assuming that they cannot go negative at this stage, what is the other option? The other option is quantitative easing. Now, quantitative easing, if you don't understand, Google it. It's a little bit complex term, but in simple words, it's basically Bank of Canada will print money, okay? They will pump money into the system, and then they purchase government financial assets. When I say government financial assets, I mean by government bonds, the bond securities that the government has. So when Bank of Canada purchases those bonds, it increases the value of the bonds, right? And Bank of Canada basically gives more money to Government of Canada to spend that money in other projects. So what we see in pandemic, the Government of Canada has been spending so much money in different initiatives, whether this is CERB or other stimulus packages and incentives to drive the economy. Basically, the intention for behind this is basically to stimulate the economy. If you pump money into the system, it will encourage consumers to take money as a loan and then spend money to drive the economy. Now, unfortunately, as a result of that, what happens when the central bank pumps the money, i.e. print the money, it basically dilutes the entire currency in the circulation. So the currency value decreases, right? If you understand how the currency circulation works in the market, it basically controlled by the flow. More flow means more supply, the value goes down. Less supply, the value goes up. It's a basic principle, but read up on Google if you want to know more about that. But ultimately, by printing money, Bank of Canada is decreasing or devaluing the currency in terms of its value. Basically, it drives the inflation up. Even though if you look at the inflation numbers published by Bank of Canada, they say, well, it's not too bad, it's monthly varying. An educated person who has some sort of financial literacy can tell you it is driving inflation up. The reason why all the assets are going up, whether this is real estate, stock, right, GameStop, Blockbuster, AMC, this will go up anyway. And the reason is because the Government of Canada and central banks like Bank of Canada are pumping money into the system, giving consumers more leverage to take debt and then spend more. And where they're spending, they're not spending in parties and they're not spending in buying luxury vacation because they have no choice right now. The only way they are spending money is basically buying assets. Whether this is Bitcoin, whether this is stocks, whether this is real estate, whether this is precious metals, gold, silver, platinum, whatever, you gotta buy something because the currency is getting devalued. If you have $10,000 in your bank, next year the value of $10,000 will be decreased. You will not be able to buy the same stuff that you can buy last year with the same amount of currency. That's what inflation is. If you do not spend that money and invest into something tangible, something that can accumulate value over time, you're being left behind. You have no choice but to invest money into buy an asset that can give you some return in the future. So when the people say, hey, this is a bubble, real estate, it's gonna go bust. Well, everything is bubble. Stock market is bubble. Bitcoin is bubble, right? The value of precious metal is a bubble. You have no choice. Are you gonna sit on the currency, cash value, and wait for everything to go burst and then buy? Well, the value of money will not be enough at that time anyway. So what are your choices? I sometimes get, laugh that when people say, hey, it's bubble, don't buy, just wait. Well, okay, fine. Wait on your just sit on the currency value. When you see the currency value is getting decreased every day, what you gonna buy when everything got bust? The currency value will be right at the bottom anyway. So what I'm trying to say, guys, is the current monetary policy that is created by Bank of Canada, or if you look at in any country, a lot of countries are doing quantitative easing. Not only Canada, US is doing, right? They're pumping trillions of dollars into the system. This is insane. Bank of Canada is pumping $4 billion per week. As per January 20th monetary policy report published by Bank of Canada, you can go on the website and look at it. They're saying they are pumping $4 billion per week in the system. That means they are printing $4 billion every week and buying government bonds. Okay? That means they're giving that money into the system to drive more debt, consumer debt, to drive more spending. And where the spending is going? Real estate, precious metals, stock, Bitcoin, whatnot. So you guys have no choice, to be honest. Either we stay as is, we keep sitting on our cash and see our cash getting devalued, or we invest that cash into something tangible, something that accumulates value over time as an asset, which can give us some return in the future. When people say that, real estate is a bubble, which I believe it's a bubble, everything is a bubble. And when it is going to get burst, this will be a disaster. Okay? Like, real estate is one of the high return asset in this country. And if it is going to get burst, it will be a disaster for this country. Like, people will be on the street. So this will be like a doomsday scenario if it gets burst, guys, because there's nothing else. Like, where are you gonna invest money in Canada? Nothing else. There is nothing else. It's a service-based economy. My purpose of this video is to educate you guys, to understand, guys. Look up these things on internet, read about it, improve your financial literacy, understand how monetary policy is created by Bank of Canada, how they're pumping money into the system, how they're driving the inflation up, which will of course increase the asset prices, like real estate, like precious metal, like Bitcoin, like stock. And you have no choice. If you don't spend and buy something valuable, you will be left behind. Your money sitting in the bank will get devalued if you do not take any action. That's it for me. I hope this was helpful. Put your comments down below, questions, whatever you have, whether you like it or not. I'm happy to take any comments, and I will see you in my next video. Bye now.